As Yago mentioned, we are in a new era of Bitcoin. We've been on the Eras Tour all day for Bitcoin. Today, we're going to close that out with our last panel, talking about the rise of Bitcoin layers, continuing the discussion that we've been having all day, including what Yago and his team just announced moments ago. We're going to bring on some of the best founders across the Bitcoin ecosystem that have been involved building and inspiring each and every one of you. So let's get really amped up for this last panel before the drinks are served upstairs. We're also going to do some Q&A afterwards as well, so hold any questions till the end. Ladies and gentlemen, a big round of applause for my panel, The Rise of Bitcoin Layers. Please welcome on the stage Muneeb Ali of Stacks, Charlie of Bitlayer Labs, Willem of Botanix, and Alexei of Bob. Wow, that was a great last talk. Congratulations again, Yago. I know you're still out there in the audience. And as I said, Yago kind of transitioned us perfectly into the fact that we are in this new era of Bitcoin. All five of us, pardon me, have talked about Bitcoin's eras, past, present, and current as well. And right now we're looking towards the future that happened today, and each of you have some big news as well that you're going to talk about. But first, I want to get right to the state of the industry. Where are things in terms of your view of the Bitcoin ecosystem? And has this recent renaissance, or as Yago mentioned, this new era, this industrial revolution, how has this impacted your view of the Bitcoin ecosystem? Muneeb, I'll kick it off with you.
Yeah, so I think the way I look at this is the comparison point that we have is Ethereum. It's sort of like, Bitcoin is the largest ecosystem and so like the community, but we let Ethereum take the lead on certain things, and I think that's fine. We can learn from that, and we can bring the sort of like the lessons back to the mothership. But we're roughly in the 2018 phase. This is what it feels like. Like 2018 in Ethereum is when a lot of the projects like Arbitrum, Optimism, like they were getting funded. There were a few sort of like L2/side chains, whatever terminology you prefer. They were live, but a bunch of excitement and at least like more convergence on the future roadmap. Like this is what I talked about in my talk as well, that people were dropping sharding and they were all coming together that L2s is the way forward, right? But a lot of promise, a lot of excitement. Like if you remember, Starkware were doing their early verifications, and it took a very long time for these things to actually go to mainnet, go live, and start getting users and growth. So my view is like we're late 2018 or something like that in Ethereum L2 world.
Alexei.
Well, I mean, I think the interesting bit about the last kind of couple of months here is that we've seen two major developments. We've seen a shift in the community and sentiment. I think Ordinals, I keep repeating this, you probably heard this before, but it was Bitcoin's CryptoKitty moment. And that kicked off a shift in the community where you have a lot of new people joining, rediscovering their kind of Bitcoin allegiance and starting to do things on Bitcoin. And at the same time, enabled by Taproot, we suddenly are on track and on track to really have Bitcoin rollups. Like there are now, we've seen, right? Yago just talked about it before, like the first kind of prototype implementations already. We are on a path to really get Bitcoin to have programmability, something that we've chased for a decade. And by, with the Taproot upgrade, which many people didn't really think about in this form, we were suddenly nearly there. And that excitement, I think, has exceeded our expectations, because it's not just the Bitcoiners. It's Ethereum, it's Solana, it's Celestia. Everyone's talking about it. Everybody wants a piece of the pie now. Everybody wants to figure out, cool, Bitcoin can do more stuff. How do I, with my project, benefit from this large, massive, untapped market and the rails that Bitcoin has and the potential that Bitcoin has to go beyond just our existing maybe DeFi and speculation bubble, but actually bring us into the real world, into more applications and solve more problems than just financial investment. And we see so many new projects emerge, layer twos, infrastructure partners, and we also see infrastructure moving into Bitcoin from Ethereum. So one example is account abstraction, smart accounts. they are new on Ethereum, and suddenly we see them on Bitcoin as well. We did something at the conference as well, where you can receive Bitcoin on your email. We can do these things now. And you can see that the gap between Ethereum and Bitcoin is closing very quickly. And we just talked about backstage about Ethereum users getting very nervous about Solana. Well, they should be getting nervous about Bitcoin L2s.
Ooh, spicy. I like it. All right, William.
Yeah, no, to add on to that, I think there's, just in summary, a few things happening at the same time over last year. We had technology, you had the Taproot upgrade, of course, we had the BitVM paper. While so many people wanted to build on Bitcoin but couldn't, they ended up building on Ethereum. But now suddenly, because of Taproot upgrades, BitVM, Bitcoin Layer 2s, suddenly, now you actually see a path. You see a road towards actually building applications on Bitcoin. So that's one, the technology. I then think, absolutely agree, the ordinals is a game changer in terms of community. Suddenly, everybody realized, wait, applications on Bitcoin, NFTs on Bitcoin. Wait, this is cool. And on top of that, Bitcoin is $1 trillion market. It is by far the best money ever created. And so suddenly that's a massive wave coming back. And so those two things on the technology side and the application side, it just creates a huge amount of excitement. I would say it's still very hard to build on Bitcoin. So it will take a while before this whole infrastructure is set in place, before all these applications grow, but the road is very clear from here onwards.
Charlie.
Yeah, I think based on whatever everybody just said, I want to add up two couple of things. Ethereum had this 8 years of evolution, right? From asset generation of ICOs to, okay, now you have assets, what are you going to get a yield of? That's the DeFi summer. And then non-fungible assets, which is cooler with building the culture back, right? Which is NFTs. And then with all the NFTs, all the composability, then we have gaming and all that. So we're sitting on the giant's shoulder, right, in the last 8 years. We crash course that in the last 8 months, in 2023, with all this primitive, right, rare assets, parent-child inscription, recursive inscription, bitmap, all these assets being generated on Bitcoin layer 1. And then all of a sudden, I remember it was last September in Singapore, everybody started talking, okay, is Bitcoin designed to be like that? Of layer 1, all these garbage UTXO, all these speculation things. Is this the end game? Right? And then we realize, okay, it's not an end game. We need a scaling solution. And then where we are, we have multiple attempts in the past, didn't really work out. There was no demand, very little demand at least, right? And then there's no builder culture. And then where we are, basically putting all the knowledge, all the lessons we learned on Ethereum or all the other proof of stake ecosystem, including Cosmos, Polkadot, you name it, right? And then the things worked, we bring it here, right? All of a sudden we realize, okay, it's one of the biggest asset protocol with very little things being built, a lot of things still missing, and then key things, right, like data availability, Bitcoin verification, all these are still missing, right? There's no programmable, trustless environment on Bitcoin. It never happened. All of a sudden now we're talking about restaking on Bitcoin, staking on Bitcoin, and all the DeFi summer potentially could come. I think that we're still, I slightly disagree on where we are on 2018. I think we are more than 2018 now. We are getting close to 2020, like on the infrastructure layer. We're getting close to the DeFi summer, but maybe 1 year away in Bitcoin space. So what's missing? Like all the scaling solution we've been talking, none of infrastructure solution have been fully battle tested on mainnet, right? We are still work in progress on the testnet or halfway down, right? And then in the application layer, there's like very little traction in terms of actual products deliver 500,000 or even 1 million user base in Bitcoin layers, right? I think we're still in the process of helping project become successful on the infrastructure layer, which we're working on. So how to help them is still a new lesson as well. Like Ethereum, Solana developers have learned so much. They fail so much as well. So all these guys now building on Bitcoin, they need to learn. So what is Bitcoin culture? What is Bitcoin assets? What does it take to become successful Bitcoin dApps? It's all new for them, right? So we are all learning as well.
So
Yeah.
Alexei,
Kyle, I want to quickly add one thing. First, I think that you have an important point, like in terms of where we are. I do think there's certain things that would accelerate quite fast in Bitcoin L2s because those are things that have been figured out in Ethereum and like DeFi primitives. We know what those primitives are. You can just bring them directly. But there are certain things that are more unique to Bitcoin, and that's gonna take more while, right? So I think I agree that I think maybe we'll fast forward in certain areas. One thing I want to point out in terms of like, we're largely talking about the technical aspects and what's maturing or what's not. I think one thing that's very, very different and very important is having even venues like these or having a developer community and having these discussions. Like this is not so long ago, like a year and a half ago, 2 years ago, you would get banned at events for talking like this, right? Like literally, there was no place. Like I've been there. Like you guys have no idea how many large Bitcoiners or public folks have me blocked on Twitter. And I'm banned from going on Bitcoin podcasts. I am banned from like speaking at Bitcoin events. And what's the reason? Because I'm like, hey, come build on Bitcoin, right? And everyone's yelling at you for that. And it's important. Like, sometimes people walk up to me, they're like, man, the amount of shit you've taken from Bitcoiners on Twitter, offline, is insane. I'm like, yes, but I think we've been successful. And I was actually thinking about it, that this community is super important. Like, if we don't welcome developers, if they don't feel like they have a base, they have a root, they can sit down and have civil conversations and disagree in civil ways and go off and build stuff, then you don't have a path forward, right? So this is actually one of the biggest wins that we have, that we planted the roots of having this community and this ecosystem, and now there's no going back. And I think one of the interesting things, like the mental model here, is there have been attempts before as well in Bitcoin where they try to change this like community, but they would always try to fork Bitcoin, like fork Bitcoin, the chain, right? So the Bcash like stuff that happened. I think what we were able to do is, and we had a very explicit line for it, we're going to fork the culture but stay on the same chain, right? So they can't actually fight you because it's still Bitcoin. We're not saying, hey, we created, it's not Bcash, right? Like Roger Ver got, really kicked out of everywhere because he started Bcash, but we didn't, right? Like this time, builders are on the main chain, but we have created a fork of the Bitcoin culture and community, and I think that was a huge success, which is actually going to carry us forward.
So let's talk about that change. There's a ton of discussion both here today and in general around things like Opcat, BitVM, and other improvements or proposed improvements for Bitcoin in general and its technical stack. Going to Alexei's spicy take, I'll continue it. Are these improvements day one? Are they just great conceptually, or could they be potentially damaging in some capacity from a technical scale? And Alexei, I'm going to start with you.
So again, whether if we fork things into Bitcoin, that's good or bad, like to summarize.
Yeah, if we implement Opcat, we implement BitVM, it comes to fruition. It's no longer just a concept and proposal, but instead these things come to actuality and they're technical developments we can build into applications. Are these improvements day one, or are they something that could be made harmful or still far off?
Well, okay, we have to be realistic. Today, Bitcoin layer 2s don't exist, right? We saw first prototypes, right, of the BitVM implementation perform. I think, it still will take us a while to see that in production. We're making lots of progress on BitVM v2 that also makes this much more practical and user-friendly and really kind of addresses a lot of the early concerns. We're moving at really fast speed. I mean, look at it. It came out in December. We're only a few months down and we have completely revamped the design. We're getting very close. We're seeing first prototypes. And is that good or bad? I mean, of course it's good. We're solving one of the big problems that Bitcoin has always had. How do we use Bitcoin for more than just holding? I find it always controversial, and I couldn't make peace with the fact that 90% of people get into crypto through Bitcoin. And then they have two choices. They either can go to centralized exchanges and use Bitcoin there if you want to do something else, or they leave and go to Ethereum, Solana, and other ecosystems, which makes no sense. And with layer 2s, with BitVM or OPCAT, right, and they're actually synergetic, we actually will be able to say, well, look, we have solved the problem of putting Bitcoin into something, depositing Bitcoin into a platform, because realistically speaking, whether you deposit into a layer 2, a sidechain, a rollup, or Binance, it's the same for the user. You're giving your Bitcoin into someone or into something, and eventually want to get it out. And today, it's a multisig, basically. Whether it's a multisig of Binance or another network, it's a multisig. And with BitVM, well, it's trust minimized. There is no longer anyone in particular that you're trusting. And this is an upgrade to the level that we see on Ethereum, which has been adopted. We see billions of dollars used on Ethereum layer 2s. Startups are no longer going to ETH. They're going to layer 2s directly, which is a massive shift also in the mindset of Ethereum builders. And so, yes, that's very good. Like whether we need a fork for it is another question. I personally probably count to the more conservative minds, where I think, yes, we definitely need covenants. And I think OPCAP probably is easier to sell because, yes, it was in the code base. Satoshi put it there, then took it out. There's been a lot of analysis. There's a lot of resources being put towards figuring out if it's robust. We have Stark announced $1 million fund. We're seeing more core developers now starting to get funding, hopefully soon, to work and build these implementations for OPCAT, for the clients to actually, test them out. And what is this damaging or not? I mean, if we don't want Bitcoin to experience a BlackBerry moment where at some point it just falls behind, not necessarily just as an asset, right? Asset, fine, but do we really want Bitcoin to be only digital gold and be nothing else than, big banks buying it up and investing in it, and that's it? I personally don't agree with that vision. I think we can use Bitcoin for much, much more. Bitcoin has something that no other digital asset or chain has. It has this global adoption. Everybody knows Bitcoin. Only 3 to 5% of the global population have crypto, but much, much more people know Bitcoin. And that's an opportunity to actually break out of this current pure speculation kind of models, get crypto into more hands. And yes, OPCAT, BitVM, or any other covenant forks, soft forks, are a way to get there. And eventually we will definitely need to also change the code base. So I think it's good, and we have to take the risk. Because eventually if we don't, well, have you ever seen any system that hasn't changed at all, except maybe for gold, and has survived? And again, is Bitcoin only gold? I don't know. I don't agree with that vision.
Charlie.
I don't agree either. Bitcoin should not be just gold, right? I think it's one of it hits the threshold of being one of the biggest assets class in the world, now engaging with other institutional firms as well. Bitcoin never had any, yield-bearing opportunities, right? It's like always like supply and demand. When certain things didn't exist, the users don't think that, right? And then you encounter with something, it's possible, then people start chatting. We didn't thought about inscribing things on Bitcoin. It happened after ordinals, and then all these things came out. We didn't think about, Bitcoin finality, and then BVM came out. Oh, we might even actually build this trustless programmable environment for Bitcoin, right? But of course, it's early stage. We might think about the real mass adoption in the future, but it's always like that. Back in days in Ethereum, I remember when I was in Polygon, when we were in the process talking to Hermes, a few other chain, for acquisition, ZK EVM was not really ready. It was always a concept in Ethereum research group. The same thing right now in the BVM community. It was an early research group. We can just battle, debate all the conceptualization stuff as you can. But eventually, code is law, code talks. Where the engineering work, right? So I think where we are is engineers need to properly get to the level of proof of concept to really get it done. And then we talk about, okay, the actual code practice, actual security levels, actual user experiences. We are finishing up this stage of debating on conceptualization that happened in the last 6 months. It was good, right? We tried out certain ecosystem, hit some interesting traction, but at an early stage. But now we're in this stage, okay, things getting real. Is big people actually want to put Bitcoin through this trust minimized bridge and achieving this Bitcoin finality? Is this use case of proof of concept actually going to happen? I think it's going to happen. We're trying our best, but I think there's going to be some mistakes as well. That happened in Ethereum. Plasma didn't work. Sharding didn't work. ZK EVM certain version didn't work. With BVM, I think it was BVM 1, kind of like people think there was some issues, and now we have BVM 2, BVM X. Probably there's many other versions coming along the way, but at the end of the day, it's about achieving Bitcoin verification, right? Whatever transaction, whatever things happening on your layers, state transition needs to be verified back on Bitcoin. So that's the result. That's the common goal. Whatever solution people came up with, the goal is similar. The goals are similar, and then it's about business demand, what other application can actually hit the product market fit. That's kind of where we are.
Back to the code talks situation. Right now, according to Galaxy Research, more than 55% of Bitcoin layer twos or layers for today's conversation intend to use roll-up designs. Why? Why is this such a majority that it has been baked into so many designs? Willem, I'm looking at you. You're looking at me. I'm going to start with you on this one.
No, sounds good. I think there's this saying, always follow the money, follow the incentives. An interesting part of rollups is that as a rollup, you get all the gas fees. It's very centralized. Can be trustless, but it's very centralized. All the Arbitrum, Optimism, all the Ethereum layer 2s is just a single node with a database behind it, and they get all the transaction fees. So you make a lot of money with it, all right? It's one of the biggest money makers in the space outside of central exchanges, etc. So it makes sense. However, you can make it trustless with like a ZK, put a ZK proof in there, or an optimistic fraud proof, and you have a centralized, trustless rollup. However, that comes with downsides. Being centralized has its costs long term, including like censorship resistance. What if your centralized party gets subpoenaed? What if you go down? There's a lot of different risks involved with being very centralized. Now, I think for Bitcoin, and that's where we came in with the Spider chain, I'm a bit of a decentralization maxi, and I think Bitcoin needs first a layer 2 that is decentralized. And so with the Spider chain, what we're building, we want to be more like an Ethereum where you can have 10,000 full nodes. It's never going to be as decentralized as Bitcoin on the base layer, but can be as decentralized as Ethereum, where every company in the world can run a full node. And so you can see this trade-off existing in the market where you have trustless, very centralized rollups or more decentralized but slower. Decentralization, of course, comes at a cost. It's the cost of speed. We all know the scalability trilemma. If you want to be actually decentralized, you cannot cheat the laws of physics. And so you cannot have 0.1 second block times, which you can have with rollups because they're centralized. It's just a central database. So it can be extremely, extremely fast. And so actually, I think in the end, they're more compatible. But I think why we've seen rollups exist first is because of those incentives. But when you think about the whole landscape, I think we know how to scale Bitcoin. We have Bitcoin on the base layer, 10-minute blocks. We have something like a Botanix, 10-second blocks, still decentralized. And then you can have rollups, 0.1 second blocks. And you see this scaling pyramid slowly playing out. And that's a little bit how I see the whole industry. Eventually, each of these technologies will reach a product market fit. Something that's slower will never have an application like gaming. But if you have something like a DeFi or a financial system, you will kind of want that to be decentralized. And so each of the markets will find its own technology eventually. That's what I believe in. And this is absolutely needed. Because if you want to scale Bitcoin to 8 billion people in the world, you don't need one layer 2, you need a bunch of different layer 2s. And ideally, you have a Lightning Network that gives you fast, free transactions as well. And so you can slowly see a world playing out where the infrastructure is there for a whole world running on Bitcoin.
Anything to add?
Yeah, so I think maybe some of my thoughts are related to the previous question as well about changes to Bitcoin, because rollups at some point will require a change to Bitcoin unless Bitmium doesn't require any changes and so on. So I think that question is very important, right? And I am of the view, I've sort of always been of the view that making changes to Bitcoin should always be very, very hard. Yes, and I separate Bitcoin, the protocol, from Bitcoin implementation. We can always keep improving the implementation. I don't consider those changes, right? Like if you're improving the mempool or whatever, I'm not saying that maintenance work or improvements on Bitcoin would stop. I think the software implementations will keep improving, but I'm talking about the protocol. So whenever there's a consensus change, whenever there's a hard fork, and Bitcoin has gone through some, I do want to see a world where at some point, there isn't much need to do a hard fork to Bitcoin. And I think we can get there. And that's why I think that this change, whichever version works, where you can have a trustless withdrawal from a L2, that's, I think, the trillion-dollar question, right? Like that might be the last change to Bitcoin that we need to make. And the way to do that is, how do we do that in as safe of a way as possible? Because everything has unintended consequences. In some ways, ordinals are an unintended consequence of Taproot. Like nobody thought about it. So I do think if you're making a big change to Bitcoin, and after that change, so that's the trillion-dollar question. Once we get that right, you can actually have these trustless withdrawals from L2s. Then all the remaining experimentation should happen on L2s. Like no need to experiment on the L1 anymore. And after that, I see Bitcoin evolving pretty much like TCP/IP, right? Like if someone says I'm going to change TCP/IP underneath, people will start freaking out, right? Like they've been building on it for the last 30 years, and the internet, everyone understands that at some point it needs to become like TCP/IP. That yes, there are more efficient implementations of TCP/IP, but no one is talking about changing the protocol on it. So I think that's the big question. And then the reason why that big question is sort of like tied to the rollup stuff is exactly how that change happens to Bitcoin has implications on how rollups are going to work, right? Like how practical are they going to be? How slow are they going to be? What are the data requirements there? And I think that's an interesting R&D area. Like the way I personally look at it is that, let the experiments happen. I do think that it's going to take a while before these things really start going and answers begin to emerge. So I'll watch it closely, but we want practical commercial systems running right now, because nothing better is going to convince core devs and other people that these changes are really needed than showing them traction at the current versions of the L2s. You have a ton of users, you have a ton of capital, you can go and tell them that, look, 100,000 or 200,000 BTC is already sitting on these L2s, and you can make this more trustless by making this change. I think that's how we get these changes in.
Alexei, anything to add?
I mean, we've said so much on this topic. I don't know. I'm going to probably pass on this.
It's okay. I've got a follow-up for you. You mentioned Ethereum should be scared of Bitcoin. Is it? We have the flippening from Ethereum being very dominant in the NFT space, and then Solana being very dominant, to Bitcoin NFTs flipping both combined at one point. We had a 7x growth in TVL, as I noted earlier, from 300 million to over 2.2 billion in terms of Bitcoin layers TVL in the last 7 months. We've got 1.3 trillion. We've got all these stats of aggregation in the Bitcoin ecosystem. Do you think that the Ethereum ecosystem is a little nervous about what's happening in Bitcoin, or do they see it as an opportunity to take that next evolution, to enter that new era of Ethereum and the Web3 industry overall?
So, I mean, I'm not sure if they're scared, right? Frankly speaking, because it's still in its infancy. And realistically speaking, we still need stable coins. We'll still need the infrastructure that Ethereum has. And it's going to take us a while to actually, have that on the same level. I mean, that's what we're all trying to do, level the playing field so that you have new projects that come in, pick Bitcoin to build new innovation rather than going to Ethereum first, because that's what has been happening for the last decade. So no, I don't think they're scared. I do think they feel the opportunity, right? You see a lot of ETH2s kind of, pay attention, start looking at, well, what can we do there? I mean, Bob is a hybrid, right? We are between two ecosystems. We are plugged into the Ethereum ecosystem. We're becoming part of the OP superchain. So plugging into that ecosystem and working with them to help them figure out how do they work with Bitcoin? Because ultimately, I don't think, and we know we're talking about, Ethereum as a test net. I don't think it's either or. I don't think we should be talking about, oh, it's Bitcoin versus Ethereum. No, we're all trying to solve one problem. Maybe there's different approaches, but it should be us against the corrupt banks and essentially the reason why Bitcoin was created, the intransparency, the unfairness of the financial system, and also the inefficiency of it. So no, I don't think they're afraid. We've seen others follow similar designs. Tron announced they want to do a layer 2 between Bitcoin and Tron. Starkware followed, saying, well, they want to expand their settlement to also do Bitcoin. And they won't be the last. There'll be more and more teams that look towards Bitcoin as the largest, most secure layer out there with the most dormant capital and the most users and the widest global adoption, and they will try to tap into that. So maybe the question is, should we be afraid that, while we do all the hard work and then Ethereum L2s come in and try to steal the show? And I think we're going to see a battle for Bitcoin and the users over the next couple of years happen. And it's going to be interesting to see it play out, because I don't think they're going to sleep on the opportunity. I think they're going to move in, and we see them moving in already today.
All right. That said, Charlie, I want to start with you. What is missing and or needed for true Bitcoin utility? We've been talking about Bitcoin and its ability to be a utility and bigger technical stack and new dApps, new developers. How do we fill those final gaps or those next gaps as we're still developing the technical stack for Bitcoin utility?
Absolutely. We talked a lot about infrastructure. We talk about mine shares, talk about, the battle between Ethereum, Bitcoin, all that. I agree with Alexei, because I worked a lot with Ethereum people. I brought at least 600 Ethereum devs to the ecosystem so far already in the last 5 months, and there's still a couple of thousand to go. I know so many of them. Like my friends still working across 30 different L2s in Ethereum. I know them inside out. But the thing is, as you said, at the end of the day, it's like you're building infrastructure for developer build on top of you, right? You're helping them to achieve product market fit. And where the user come from, for what reason they want to use your application, for what purpose. Like, no matter what kind of infrastructure you deliver, that's the operational level. That's the common challenge everybody facing, including us, right? And also, what is the primitive that actually makes interesting for Bitcoin, right? Is it because of Bitcoin culture? Is it because of the assets? Like, whatever is rumored ordinals become all of a sudden very sexy because of last year? Or we talk about the new primitive, right? There's like a lot of new innovation coming along in Ethereum. That's why I think still, no matter when we call this Ethereum is a sidechain or Ethereum is an interesting test bed, it's where the innovation come from, right? Bitcoin never had that. So hopefully we will have a lot of interesting developers really try to deep dive, going back to the drawing board. Okay, this application is solving this problem, solving this UX problem, to really get more users come from. I really remember vividly, like there's a lot of people I know who were absolutely no idea what is Web3. In 2021, they start buying Ethereum because they want to get into this NFT, right? I think that happened last year because ordinals, right? People want to buy this interesting, cool ordinals. That's why they get to know what is Unisat, what is Xverse. They bought their Bitcoin because of that. So recently, there's people using Blink, right? And all these wallets, construction wallets, they don't need to actually remember the seed phrase and tap into interesting farming stuff. And then there's like 800 million of users on Tong, people using Telegram, right? Those people don't care which chain actually. They care about the result. So the missing gap is DevRel and a user education. That's the part I think Ethereum did fairly well. And I think we comment about Solana and a few other chains. I wouldn't say they didn't provide a value. They provide a ton of value to educate the space. But at the end of the day, I think the opportunity for us is no matter what they do, like they can't beat Bitcoin, right? On the asset class, on the first principle. So the opportunity for us is, okay, what are the applications can really hit interesting home run in terms of product market fit? If it's not that, we are just building another infrastructure, copy paste all these applications, which somehow already exist in other things, but then replug into Bitcoin, which is pretty cool already. But if I'm a user, I'm always thinking about, okay, why these cycles, they have interesting new applications. We can bring another, let's say, half billion users, right? 2021 was amazing because of that. I think we are still not even halfway down on this bull run, because this bull run was essentially driven by institutional buying purchasing power from ETF. There's no too much like really exciting new innovative applications being properly built yet, right? And properly promoted yet. So I think we are still halfway there.
Willem.
Yeah, I'll take a more spicy take here. I do think Ethereum should be more afraid. In essence, when you think about all the applications on Ethereum, and actually a lot of those founders of those applications used to be massive Bitcoiners, but they couldn't build on Bitcoin, so ended up building on Ethereum. But when you think about it from their perspective, if you are launching an Ethereum application today, do you choose to launch it somewhere on Ethereum in a crowded market, or with exactly the same smart contract code, with exactly the same lift do you do it on Bitcoin, where there's almost no market yet, and 3 times bigger the liquidity, 3 times bigger the market size? And so eventually, all that activity will flow back to Bitcoin. Bitcoin is the big black hole. Everything goes there. And so I do think they should be afraid. Like from what I see, a lot of Ethereum dApps are looking to move over. And why wouldn't they? There's this big unexplored market that's waiting there. And so it makes the most sense from a very first principle logic perspective. And I think maybe not everyone has fully figured that out, but like in the back of their minds, like it's playing in there. It's in subconscious. It's slowly in there.
Yeah, I would actually agree. I think my take on this is they are afraid of Solana, and they're not afraid enough of Bitcoin L2s, right? And I think the interesting thing over there is, and I've nothing against Ethereum, right? Like I was at ETH Denver, and I told those people I actually participated in the ICO. I held ETH for a while. I don't own it anymore. It doesn't make sense. I would much rather own Solana than ETH at this point. But I think the interesting thing and the interesting situation with Ethereum is that it's the only ecosystem that has tried taking a shot at Bitcoin by trying to be money, right? Like they had because they realized that the largest asset class is actually going to be money. It's going to be whatever becomes internet money. I think they were smart enough to realize that that's going to be the largest asset class. They took a very clear shot. They're like, hey, ETH is ultrasound money. They're changing their token economics. They're positioning it that way. And it's also the only ecosystem where there's a culture of like, the flipping. Like, hey, we're going to flip Bitcoin in this, flip Bitcoin in that. So you take a shot at the king, you better not miss, right? And then once they've missed, once it's clear that Bitcoin actually was able to sustain itself as like the pure money play with all the ETFs, and it's like fundamentally designed as money. Right? So that happened, and then the argument for why ETH is going to flip Bitcoin was all about nobody's building on Bitcoin. You can't program Bitcoin. All of that arsenal has been taken away, right? From the L2s, so they have nothing. Like how are they going to attack Bitcoin now? So now they're trying to turn attention back to ETH as a application platform, and Solana is eating their lunch because they're focused. They're not trying to be money. They're trying to be a really good place for devs to come and build stuff, right? Solana is going to keep upgrading its consensus. It's not trying to be Solana is never going to change because it's money. So they're eating their lunch at being a better dev platform. Then Ethereum is looking at like maybe ETH becomes a DA layer. Well, there's Celestia, and that's the only thing they do. They're laser focused on, we're going to be the DA platform. So there's Bitcoin the money, Bitcoin L2s, and Solana. And the interesting thing here is people are laser focused. Bitcoin L2s are laser focused on making Bitcoin programmable. That's the only job we have. ETH is stuck between, a rock and a hard place, and they're trying to figure out what they're going to do. And nothing against them. I wouldn't want to be in their position right now.
It's a good point. We're going to pause right here. I could see Alexei's got maybe a secondary comment. It might come back to you.
No, I fully agree. I love it. It's very, very good take.
Perfect. All right, we're going to pause here. I want to make sure if we have time for maybe 1 or 2 questions in the audience. If everyone does have a question, be happy to take it. I see one in the back. If we can get a mic right there in the center.
Thank you for your time and your insights. So what would you say to people that are anti-Bitcoin layer, that don't see a reason for Bitcoin layers? What would you say to that?
I would say Lightning is a Bitcoin layer.
I'd say that's fine. I mean, look, if you look at it from today's perspective with OPCat, right, which also might help with other applications. It's not just for Bitcoin layers. I mean, yes, it's a very clear kind of marketing around, okay, hey, it enables like secure bridges and better custody. But hey, better custody does not have to be used for Bitcoin layers. I mean, look, what are the original L2s? It's exchanges. Exchanges are the original L2s. Are they bad? I mean, how do you get retail onto Bitcoin? Well, okay, you can use OPCats to have better custody for exchanges. Otherwise, apart from that, layers don't really touch Bitcoin, right? It's on top, no forks. We work with what's already there. If you don't want them, why should you care? You can continue using your Bitcoin as you were before. You can fully ignore Bitcoin layers. You can just hold, invest. We won't bother you. You won't bother layers. That's absolutely fine. But if you think about, okay, we're adding a fork, well, that will actually also help with custody. And custody is a big problem around Bitcoin overall. So I think, I wouldn't say, it's an issue there.
I would also add that given my years of experience of talking to that crowd, our energy is much better spent in actually building and growing the economy, because that's a dead end, right? And the more you ignore them, like my policy for the last year and a half has been just ignore them. Like they're irrelevant, ignore them with a smile, just move past and actually show the numbers, like real traction. Once, for example, if more BTC ends up in Bitcoin L2s than all of the ETFs combined, no one can ignore the L2s at that point, right? So I think real growth in numbers will speak louder than anything else in any number of arguments.
I would actually go a bit further. I think it's really dangerous if you don't want Bitcoin layers. If all the Bitcoin ends up at ETFs, at central banks, then we've lost. And this whole experiment of decentralized global money, that is all lost. What we want to be is keep scaling through a whole economy where the whole world runs on Bitcoin and the money as the money, where every transaction in the world uses Bitcoin. That's where we want to be. And so I'm really, really afraid that all the Bitcoin ends up in the hands of the ETFs, in the hands of the central banks, because then we're going to repeat history, and then we're going to, they went off the gold standard because all the central banks had a lot of gold. And so if we go that route, I think that's a really dangerous path. So I'm building to not make that happen.
Yeah, and I think we can maybe start two new flippening charts. One chart could be BTC held in L2s flips ETFs. Second chart could be Bitcoin L2s flip Ethereum. And I think that's the type of flippening that I'm very interested in seeing. Charlie.
We'll love to see these two flips, but it will take some time, right? But I think, back to the question, people like to hate what they hate, but traction talks, that's the first thing. And then Satoshi Nakamoto also mentioned in his early days, if we keep in mind that there's a miners, which is a very important piece of puzzle in this Bitcoin ecosystem, how are they going to get incentivized? Multiple rounds of halving again, right? We need the layers of the additional rewards. The miners were hating it last year. Remember that, in case people in the audience don't know. Miners were absolutely shit-talking Ordinals. And then realized, oh, wow, there's additional rewards, block rewards. All of a sudden, I'm earning more Bitcoin. What happened? Right? And then they start learning what is Ordinals, what is all these new things coming along. It's okay. They will change their mind with the traction.
We got two more questions, and then we're going to wrap up here. One in the back, center.
My question, is this working?
Yes.
My question is, are we being stupid? Ethereum was at the top of the world, right? The only thing that was bigger than Ethereum was Bitcoin. They feared for nothing. They were coming for the king. And then what happened? They became a modular chain. They introduced a whole bunch of different layer 2s. These layer 2s fractured the Ethereum ecosystem, fractured the user base, fractured the liquidity, destroyed the UI experience. And now, none of those layer 2s is dominant. Some of them have actually become less valuable over time. Polygon being the classic example. And suddenly, Ethereum, instead of coming for Bitcoin, is scared because of Solana. So my question is, with this mad rush into modularity, are we being stupid, right, by just following the Ethereum game plan and introducing all of the fragmentation of modularity as well as its potential benefits?
It's a very good point and very good question, obviously. And I know why you ask it.
I know why I'm asking too.
But no, it's a very valid point. On the other hand, this is a problem. If we have that problem that we see adoption of Bitcoin layer 2s, and then you have to figure out, oh, which one do I use? Because there are so many that have a market and adoption and use cases. That's a problem I'll take and then go figure out. I mean, account abstraction, smart accounts, there's a lot of stuff happening on Ethereum to solve that problem where you will not even see on which layer you're actually transacting. You have a lot of big DeFi protocols on Ethereum working on, okay, we're deployed on one chain, but we'll accept your assets whether you're on Arbitrum, Optimism, Base. You'll move them in, make transactions, get them out again, and that's what happens in the background. This has been explored in the past, like things like Polkadot and Cosmos have been working on these interoperability standards for years. They focus too much on tech. Ethereum has also the UX progress. And realistically speaking, we'll have to deal with that problem as well on Bitcoin. But let's get there first. Yes, we can talk about, what's the alternative? We can say, okay, one of us we're all going to throw our approaches away. We're going to work on one thing together. But everybody has different design choices. You don't want to put all your eggs into one basket. We don't know we all have our opinions on what we think the world should look like on the Bitcoin side. We'll see what plays out. But I think we know you need this competition, you need this fragmentation to figure out what design actually makes sense. And then if you have a few winning designs, because yes, there's a winner takes it all market, but on Ethereum you see also top 3, 4, 5 big players. Then we can figure out how do we transact between them.
I also think that Ethereum is in a slightly different situation because Ethereum fragmentation actually first starts because there are apps on L1 and then there are apps on the L2. Bitcoin doesn't have it, right? So it's in a slightly different position where the way onboarding is going to work is their users got used to using Ethereum first, and then they're like, oh, now I have to go to an L2. I think over here, wallets and the way users get onboarded is basically L1 is your cold storage. You keep your savings in cold storage, and now you're going to a hot wallet, and this is an L2. And I think then you let the experiments happen on the L2 side and figure out, because it's entirely possible that Solana-like designs are also possible as L2s, right? Where you're trying to go after this fragmentation problem, but as a Bitcoin L2, where the gas fees is in Bitcoin, the capital deployed is actually Bitcoin. So I think those things I would much rather see happen as L2 experiments versus L1 experiments somewhere else.
I want to add up just on Yago's question. I don't think we are repeating the history of Ethereum. Absolutely not. It's very different compared to the dynamics, right? Look at Ethereum, what happened, right? Vitalik wants to build on things on Bitcoin. He couldn't build it, right? He's trying to bring these tooling companies on there, right? And then Ethereum tried there so much on all these trial and error on scaling. And then there was a lot of commercial reasons, layer 2 become the way to go about it. But as Muneeb mentioned, I think I totally agree. I interface so many Ethereum layer 1 blue chip DeFis, and then all they want is just a transactional environment, and then all the value come back to Ethereum. And whereas Ethereum layer 1 actually has a lot of valid applications, whereas Bitcoin you can't do that on layer 1, right? A lot of the application will be natively built on layer 2 with all the programmability things coming along ways. And of course, there's a debate. We have some narrow-minded use cases just sit on layer 1. We can also happen, but I doubt that's going to be mass adoption. So it's very different dynamics with very different architect. So if we want to mimic Ethereum, it's not going to happen as well because the industry changed so much already. In the old days of 2015, it was just a lot of trial and error. So we can argue Ethereum made a lot of mistakes. But the key problem right now is, as you said, they're stuck in between, should be money, real money like Bitcoin, or be hyper performance infrastructure like Monad or all the others. They're stuck in between. I agree.
We got time for one short, quick question. Last one.
Yeah, one of the big reasons I got into Bitcoin is because 2/3 of the world doesn't have access to either good money or a robust financial system. And so from your perspective, I think the two use cases for layers are scalability and functionality, increasing both of those. Muneeb, like you mentioned, Lightning is a layer. I think it's been proven that we need scalability. But what do you view as the main use cases from the functionality side of things, and why do we need to do that in layers and L2s?
Willem, I'm seeing you shaking your head first. You want to start?
Yeah, I think this is really important. In the current traditional financial system, you have the banks, right? Very centralized parties. And ideally, I would want to see that in DeFi. I want to borrow against my Bitcoin. For example, on Ethereum, you have Aave. You want to borrow stablecoins against your Bitcoin. If you want to buy a house, today you go to a bank, your bank takes your money and lends it out, etc. You have fractional reserve banking. But if you can do that on chain with a smart contract where you can read the code that is being ruled by code and not by humans, and so that's a better version of the traditional financial system. Actually, when you look at what we've been building, is a 10x better version of the financial system. Like the tokens, I consider often them like stocks. Like why can anyone, for example, in Lebanon or Egypt, cannot buy all the stocks on like a New York Stock Exchange? And when you see it on blockchain, it's like open 24/7. It's permissionless. It's encoded on in smart contracts, and that is a way better version of the financial system that we have today. So I think stable coins, lending protocols, securities, tokens, decentralized exchanges. I can see the market makers are the new hedge funds. So we are speed running a traditional financial system, but then in a 10x better version. And I think that makes the world a way fairer, way more equal world. And I strongly believe in that. And I think we need that on Bitcoin.
Alexei, Willem, Charlie, Muneeb, Bob, Botanix, Bitlayer, Stacks. Thank you very, very much for all the thoughts and insights. Thank you, audience, as well, for our questions. And thank you, everybody, for attending day one at Bitcoin Builders Conference here in Nashville. We will be back tomorrow with a half day full of content, both technical workshops, more conversations here on the main stage. Until tomorrow, this is not financial advice. Do your own research, educational, informative purposes only. I'm your host, Kyle Ellicott. Until tomorrow, take care, everybody, and thank you very much.